Hi, John Stoddard. I just want to offer a cautionary tale and to tell you a little story. We were approached by a prospect that wanted to help raise about $5 million. We would become an advisor, get on their cap table. They were asking for $5 million and then an additional $10 million raise. So we started looking at it. We said, hey, look, send us your data room. Let's take a look at your P&L. Let's take a look at your balance sheet, your cash flow statements. So we took about a week to look at this, and we dived in and said, your P&L says you're doing 10 million, but you're not really a $10 million company. You are a $5 million company because it looks like you have a bunch of minority investors that are peeling off nearly 50% of your revenue. Unfortunately, we can't help you. There's no hedge fund we have a relationship with or a private equity group that is going to say, hey, look, we're going to invest in that. Because if they put money in and it grows, it's still going to be peeled off by the minority investors. Here's the lesson. If you're an entrepreneur, you're starting a business, and you need to raise money, and the first group you go to is friends and family, you still need to have a shareholder agreement in place or a SAFE, which is a simple agreement for future equity, something that caps it on what they're allowed to get. Because this business, it was great for the minority investors. I mean, it was spectacular for the minority investors. They put $30,000 in, and now they're getting like $20,000 a month in paychecks. This is mailbox money. It's perfect for the investor. But if you're trying to raise $5 million, this is a toxic cap table. Now he's got to go back and solve it, meaning he's got to have to talk to all his friends and family and say, gosh, you know what? You're going to have to surrender this for, stock and maybe some if we go public at some date. I'm just making a warning. If you're going to friends and family, raising money, whether you think it's going to succeed or not, get a shareholder agreement in place or a SAFE, which is a simple agreement for future equity. Hope that helps. Take care.